Hey everyone, and welcome to the AI Tech channel. Today, we're diving into the electrifying world of electric vehicles, but not everything is charged up. Tesla, the undisputed king of EVs, just took a serious hit. The stock crashed over 7% recently. I know, shocking, right? But here's the twist. While Tesla is stumbling, a rival is quietly gaining ground and actually making money. I'm talking about Rivian. This is a story of disrupted dominance, unexpected victories, and the brutal realities of the EV market. Buckle up, because this is going to be a wild ride. We'll uncover the hidden numbers, the strategic masterstrokes, and the potential game changers that could reshape the entire industry. So, stick around, because you don't want to miss this. Now, let's get straight to the point. Tesla's stock took that nosedive after some disappointing Q4 earnings and growing anxieties about the slowing demand for EVs in key markets like China and Europe. Their PE ratio is sky-high, making investors nervous. But amidst this Tesla turmoil, Rivian dropped a bombshell. They announced their first-ever gross quarterly profit. I know, it sounds crazy, doesn't it? The upstart EV maker, the David facing the Tesla Goliath, is actually making money on each vehicle before expenses. This is a massive achievement for a company that was, until recently, burning through cash like a wildfire. They're also delivering vans for Amazon, racking up over 1 billion package deliveries in 2024 alone. That's a serious validation of their technology and manufacturing capabilities. But how did they pull this off? And is it sustainable? Let's dig deeper. Okay, let's break down the numbers. Rivian's Q4 revenue jumped 32% to $1.734 billion, smashing analyst expectations. They even managed to shave off $31,000 in cost per vehicle. That's a huge improvement in efficiency. Their Q4 loss per share was also smaller than expected, at 48 cents versus the anticipated 66 cents. Tesla, on the other hand, missed revenue estimates and saw their automotive gross margins shrink. This is where the contrast becomes really stark. Rivian is showing progress in controlling costs and improving profitability, while Tesla is facing margin pressures from rising lithium costs and price cuts, especially in China. Now, I'm not saying Tesla is doomed. Far from it. But this is a wake-up call. The EV market is getting more competitive, and Rivian is proving that it can play with the big boys. One of the keys to Rivian's success is their focus on cost efficiency. CEO RJ Scaringe has emphasized that this is critical for the launch of their mass-market product, the R2, which is slated for around 2026. This is where they're betting they can truly scale and challenge Tesla head-on. Let's talk about the challenges and opportunities facing Rivian. Rivian still faces significant hurdles. Their 2025 delivery forecast is actually lower than their 2024 numbers, which could be a cause for concern. They're also projecting a substantial adjusted loss for 2025, although it's smaller than the loss they incurred in 2024. They're relying heavily on a $6.57 billion loan from the Department of Energy to build their new manufacturing plant in Georgia. The fate of that loan and the potential impact of changes to EV tax credits under a new administration are major uncertainties. RBC Capital Markets analyst Tom Narayan pointed out that Rivian is executing well, but policy challenges remain. This highlights the importance of government support and regulatory certainty for the EV industry as a whole. Now, let's talk about the tech behind Rivian. They're not just building cars, they're building a technology platform. This is where things get interesting. They leverage advanced battery management systems, sophisticated driver assistance systems, and over-the-air software updates to continuously improve their vehicles. They're even exploring new materials and manufacturing processes to further reduce costs and improve performance. This is all part of their long-term strategy to become a leader in the EV market. Let's get into the details of the underlying technology. We need to talk about the battery technology that Rivian is using, specifically their battery management system, or BMS. The BMS is a critical component of any EV battery pack. It monitors the voltage, current, and temperature of each individual cell, ensuring that the battery operates safely and efficiently. Rivian's BMS is particularly advanced, using sophisticated algorithms to optimize battery performance and extend battery life. This is crucial for maximizing the range and longevity of their vehicles. They are also using something called Model Predictive Control, or MPC, to optimize the charging and discharging of the battery. MPC is a control strategy that uses a mathematical model of the system to predict its future behavior and then optimizes the control actions to achieve a desired outcome. In the case of the BMS, MPC is used to minimize energy losses and maximize battery life. And finally, Rivian is using something called Kalman filtering to estimate the state of the battery. Kalman filtering is a statistical technique that combines measurements from multiple sensors to estimate the state of a system, even when the measurements are noisy or incomplete. In the case of the BMS, Kalman filtering is used to estimate the state of charge, state of health, and other important parameters of the battery. This information is then used to optimize the charging and discharging of the battery. The paper, a comprehensive review of battery management systems for electric vehicles, published in the Journal of Power Sources, highlights the importance of these advanced control strategies for improving the performance and reliability of EV batteries. Now, how does this compare to Tesla? Tesla isn't standing still, of course. They're continuing to innovate in battery technology, manufacturing processes, and autonomous driving. They're also expanding their charging infrastructure and exploring new markets. But the rise of Rivian and other EV competitors like Lucid and NIO is forcing Tesla to adapt and innovate even faster. There are two main arguments here. One camp believes that Tesla's scale, brand recognition, and technological lead will allow them to maintain their dominance in the long run. They point to Tesla's supercharger network, its advanced battery technology, and its expertise in autonomous driving as key advantages. The other camp believes that the EV market is becoming increasingly fragmented, with different players catering to different segments. They argue that Rivian's focus on adventure vehicles and its partnership with Amazon give it a unique position in the market. So, how can we verify these claims? Well, we can track the market share of different EV manufacturers over time. We can also monitor customer satisfaction ratings and brand loyalty. And we can analyze the technological advancements and strategic partnerships of each company. By tracking these metrics, we can get a better understanding of who is winning the EV race and where the market is headed. The bottom line is this: the EV market is evolving rapidly, and the competition is heating up. This is good news for consumers, who will benefit from more choices, lower prices, and better technology. Now, what does all this mean for you, the investor? Should you be buying Rivian stock? Or is Tesla still the best bet? That's a question you need to answer based on your own risk tolerance and investment goals. But I will say this: Rivian's recent progress is a sign that the EV market is not a one-horse race. There's room for multiple winners, and Rivian is proving that it has the potential to be one of them. And if you're working in the auto industry, now's the time to buckle up, because things are about to get even more interesting. So, to recap, Tesla stock is down, but Rivian just achieved a major milestone. The EV market is becoming more competitive, and the future is uncertain. But one thing is clear: the transition to electric vehicles is happening, and it's going to transform the automotive industry. The question is, who will be the winners and losers? That's what we'll be watching closely here on the AI Tech channel. Now, I want to hear from you. What do you think about Rivian's chances of challenging Tesla? Are you invested in either company? Let me know in the comments below. And if you found this video helpful, please give it a thumbs up and subscribe to the channel for more insightful analysis of the latest tech trends. Thanks for watching, and I'll see you in the next video.